Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking at the running 1 year return on investment, or ROI. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out Into the Cryptoverse Premium at intothecryptoverse.com, where you get access to this chart as well as a lot of other charts. Now, let's go ahead and jump in. So, I've had some questions recently from people asking. We have a lot of different indicators for Bitcoin. Some of them suggest a bottom is in, others don't. And someone recently asked, well, what are some of the ones that are still suggesting the bottom might not be in? And I wanted to go through one of them in this video. So what you're looking at here is the running 1 year ROI of Bitcoin. And if you can imagine, we've talked before about diminishing returns, but you'll also see diminishing returns on a running 1 year ROI basis as well. You could imagine a line through these peaks. A line actually fits through these peaks up here relatively well. But while the 1 year ROI peaks have been diminishing, the actual 1 year ROI in terms of like the bottom has more or less been somewhat the same. Okay. Now, it doesn't mean it's always going to stay like that. And you should remember that there's a difference between measuring the ROI as say like a running window of 365 days versus measuring it from a fixed point in time from say like the market cycle peak. For instance, if you were to go look at the Bitcoin chart and we were to just sort of zoom out here and look at every single bear market, we know that we've had diminishing returns to the upside, but the losses in the bear market have also been somewhat diminished, going from say 94% down in the first bear market to about 87% down in the second bear market, and then to the third bear market about an 84% drop or so. And it's sort of just like the question that gets asked, right, is a 70 is dropped about 74% so far. Is a 74% drop sufficient to really bring this bear market home? And personally, I'm not sure that it is. I've been fairly vocal that we certainly could have a lower low eventually. I don't know how long it's going to take, but it is a distinct possibility that I think people should plan for, whether it happens or not. And one of the arguments too, there's the indicators, of course, but from another perspective, this is really the first time that Bitcoin is experiencing or will be experiencing a recession. Yes, we had a very brief one in 2020, but the Fed quickly printed our way out of it. This is the first time that Bitcoin is really experiencing tough economic conditions. So then it makes you wonder, right? Is a 74% drop, right? Is this too big of a jump to go from 84% down last cycle from peak to bottom to then only being 74% down from peak to bottom here? Now, you might notice that this has been diminishing from one cycle to another, right? So far, it has in fact been diminishing. But what hasn't really been diminishing nearly as much is, say, the running 1 year ROI. Now, the reason is because the reference point is not always, say like the exact peak, right? Like the reference point does not always come exactly 1 year later in terms of the bottom and the top. If you go look at say 2013, the peak came in November, but the 1 year ROI did not actually bottom until January of 2015. So you can see that the reference point up here, while it started to come back down, the 1 year ROI was able to continue going down, even though the reference point from 12 months before was actually past the market cycle peak. So if you look at this chart, you may notice that you can see that the 1 year ROI has had three fairly distinct bottoms. The first one bottomed at around 0.163. The second one bottomed over here at 0.205. And the third one bottomed at 0.164. So we have three prior bottoms from Bitcoin bear markets when looking at the 1 year ROI. And you can see that they all bottomed at around 0.2, plus or minus a small amount, right? I mean, like not exactly 0.2, some went slightly lower, some didn't quite make it down to 0.2, but they more or less got within that ballpark, right, of around 0.2. Now remember, even if you do go lower, or if you go down to those levels, they historically have not been sustained for very long because, of course, you're always comparing it to a year before. But you can see right now the running 1 year ROI on Bitcoin is actually coming in at 0.311. So we're already at 0.311. It's interesting because we put this, we've had this chart on the channel for a long time, and once upon a time, it seems somewhat absurd to see it going down to 0.2. But the chart always said that this is a possibility, and we find ourselves in October of 2022, which is 1 month away from referencing the market cycle peak at 69K. And we find ourselves at 0.311. And you can see that we're seeing some type of capitulation on the running 1 year ROI. At this point, it's not because the price of Bitcoin is going down. It's just because our reference point from 1 year ago was going up. If you think back to October, mid-October, you'll remember that actually in mid-October, Bitcoin, sorry about that. In mid-October, Bitcoin actually made a rally up to about above the 60K level. You can see this wick here. It occurred the week of October 18th, and we went to around the highest point was $66,998. So we went to almost what was the market cycle peak in the middle of October. And you can see on the running 1 year ROI chart, we are sort of seeing that more so time-based capitulation. Again, there's a price-based capitulation. Time is an important component as well to bear markets. And we're seeing that similar type of capitulation in October, 1 year after that point. So then the question is well, could this hit around that 0.2 level? Well, the easiest way for it to go 0.2, and by the when I say easiest, I mean what is the highest the price could be where 0.2 or what is the highest the price could be where it could actually hit 0.2? Well, the way to figure that out is to go back and figure out, or look at the exact day that Bitcoin actually hit its peak. Now, if you go back and look in say November of 2021, you can see the peak actually occurred on November 10th. Okay, so November 10th of 2021. But I should also say that the data that I'm using is only looking at daily tops, not wicks. So while the wick occurred on November 10th, the highest daily close or the highest daily price, you can see here, it opened or it closed here on November 8th at 67,556. And then it opened on November 9th, and then we came down just a little bit. So it would actually make more sense to say compare it to November 8th or November 9th as opposed to the wick, because that's what the data will remember. So we first get the price, the highest price that we saw, okay, and on the daily open or on the daily close, it was 67,792. 67,792. So 67,792. In order to find what or in order to figure out an 80% pullback, if you simply go, I mean, we could always just quickly do the math, but if you simply go look at the running 1 year ROI, you could easily play with this very quickly. But before we do, I mean, let's just go through it. So the close was, the high was 67,792, which was slightly above where the close was, which was 67,556. So the highest point really that we'll be comparing to on here is 67,556. Okay, so I mean, we know 10% of this is just 6.7K. Therefore, 20% of this would just be about 13.4K, but notice it's 556, so really about 13.5K or so. So 13.5K. And if you go put that number in on November 8th, so what we're going to do is we're going to go over here to our future projection, and we're going to go to November 8th, and we're going to put in a future price on November 8th of 13,500, and you apply it. And what you'll see here is that it would get you to that same zero point 0.2 level. Okay, so if Bitcoin were to have a capitulation, right, in November, and it went down to around 13.5K, it would actually correspond to the 1 year ROI hitting a fairly historic bottom. Now, it could go lower, right? It might happen at a later time. For instance, if it plays out like 2014 and 2015, maybe the actual bottom on the 1 year ROI is not exactly a year later. If that's the case, let's just put a future projection in, but let's say the bottom actually occurs on December 8th at 13.5. Well, then you can see it doesn't actually get all the way down there. In order for it to get down to 0.2 on December 8th, you would have to go a bit lower. Let's try out 12.5 and see what that looks like. It goes down a little bit if we go down to say, I'm just going to go ahead and put 10K in and see what that looks like. That would get you there, right? Maybe a little bit. It would actually get you a little bit lower. So maybe 10.2 would actually get you there if it happened on December 8th. Okay, this just gives you an idea of what it would take to really see it get down to those levels based on the reference point being 1 year before. I think it's a pretty interesting chart. I know not everyone appreciates these types of charts because it is somewhat, to some degree, you're looking at, or you might wonder, well, what's the point of measuring it exactly a year later? It's a good point, but at the same time, if you go say look at the prior bear markets for Bitcoin, right? Like, and I've showed this chart a number of times, except for this first one over here, they've lasted. The last two lasted a very similar amount of time. Now, that's not to say that this one has to last the same amount of time. It might be a little bit shorter, it might be a little bit longer. It's really hard to know. And in fact, the 2018 bear market was actually in time, it was actually shorter than the 2014 bear market. You can see the 2014 one actually lasted a bit longer than the 2018 one. Right now, you can see we're currently getting pretty far into the bear market, but it doesn't necessarily mean it's over. But that's one of the reasons why I think the 1 year ROI is interesting, is because the last two bear markets have basically played out to where the bottom ended up being about a year later, plus or minus a couple of months. I'm not promising anything here. It's hard to know exactly what the macro is going to look like. We've laid out the sort of the conditions that we're looking at, but this is something that I think is at least worthwhile to consider, that we are seeing that capitulation. And really, as I speak, or even today, the 1 year running ROI is continuing to put in a new low. It's at 0.311, and you've seen it. We've watched it continue to drop all year. What's interesting is that normally when the 1 year ROI drops, it drops relatively quickly, right? And it doesn't really hang around an area too long. This time, it actually did. It looks a bit different. But why is that? Well, it's because we had a double peak. Had the peak occurred, had the only peak been, say, April of 2021, then the reference point would, of course, been April of 2022. But in April of 2022, Bitcoin had just had that rally, the bear market rally, back up to the 200-day SMA, and the 1 year ROI was nowhere close to 0.2. So there are a lot of pieces of evidence to show that measuring it from April, the bear market, could make a lot of sense from a technical perspective. From the 1 year ROI perspective, which doesn't really care at all about technicalities, it just wants to know the max price, you can see that it's coming down more or less right on schedule as it normally does. Okay, so look, I'm not here to promise you any certain price movement or anything like that. And a lot of people argue I'm too deterministic on things, and I try not to be. But I will say, my own experience back in 2018, I thought 6K was the bottom. I did, and even up until the very end, right when the bottom fell out, I felt somewhat convinced that 6K was the bottom, because we've been holding it for months. We'd simply have been holding 6K for such a long period of time that it made sense to me that it was the bottom. But one interesting observation that I would like to just quickly point out, and maybe I'll do another video on this, is that there are some similarities that we should at least be aware of. For instance, if you look at July of 2018, it was about a 20% move to the upside. If you look at July of 2022, again, it was about a 20% move to the upside. Following that 20% move, we then had August, which was 9% down. Over here, August was about 14% down. Then September was about 6% down. This September was about 3% down. October was about 4% down so far. This October, we're about 1% down. But the exact percentages are not necessarily important. What might be more important is just looking at the trend, right? Like July gave us that counter trend rally, and then we just sort of marched down, right? 1, 2, 3, where the monthlies started just marching down. So if you look at this on say like a daily time frame, it just looks like we're going sideways, and we are, right? But if you look at it a different way, we're actually spending a lot more time at these lower values, like at the lower part of the range, and not really spending nearly as much time at the upper part. And if you go look at this on, say, like the monthly time frame, that's really captured in monthly candles, right? I mean, you can see that we marched down, we had a monthly close at the prior monthly closes, or at the prior, the prior lowest monthly close. The next one went down just a little bit lower. If October manages to go down just a little bit lower again, this was the capitulation that really woke everyone up, and it happened in November of 2018. Now, the market cycle bottom occurred in December, but the major drop that really woke the cryptoverse back up was in November of 2018. So if you go back to the 1-year ROI, and again, as I said before, right, like if we go, say, just to November 10th or something, and put in a price of say 13,500, that gets you to around that 0.2 level. So again, it's just something to consider. I want you to remember that I'm just trying to be objective. I'm not trying to push anything necessarily. I'm just trying to say, look, this is an objective way to look at the data. I wish I had considered in 2018, right? I wish I had considered the downside, because while I did save cash for this area, I didn't save nearly enough for it because of my refusal to even consider much lower prices. So anyways, hopefully you guys enjoy this content. I'm gonna probably make a longer video on some of these trends over here, so look out for that. But again, if you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and remember to check out Into the Cryptoverse Premium at intothecryptoverse.com. You'll have access to these charts. We also do a lot of other stuff as well. You can always just check it out for 1 month and figure out if you like it or not. You can cancel if you don't. But again, make sure you check it out. And then we also do have the free newsletter, which you can find a link to in the description below. All right, guys, we'll wrap it up there. I'll see you guys next time. Bye.